Hello, good morning and welcome to today's morning report chart appraisals with me, Richard Perry, market analyst at Hantec Markets. We have a fairly mixed open actually in these markets, although the equity markets are stronger. Dollar is sort of remains under pressure really. It's been again hit yesterday by the announcement that Donald Trump has fired another one of his team, his administration. Anthony Scaramucci has been in the job for 10 days. He lasted a whole 10 days and then he's got fired. There is a sort of a possibility that Trump could be, or John Kelly, who's come in as the chief of staff, could be now looking to sort of wipe the slate clean and move forward, and that is obviously the reason, or said to be the reason why Scaramucci got fired. However, it still doesn't look great, does it, on Trump, and subsequently the dollar remains under pressure to the downside. 93, that level, that green line on the chart there, 93, that was the key low back from June 2016, basically the day after Brexit, or the day of Brexit. Now, 92 or 91, is it 91.80? Yeah, 91.90. Basically, between 92 and 93, you've got these two big lows, May, June of 2016. This is big. This is big support. This is big support area for the dollar. And a break below that May low, that really does open the downside. So, it is coming up to a critical moment for the dollar, and this sell-off that seems to be accelerating actually continues. Now, what we do have is record long positioning on the euro back to 2011 actually, yeah, back to 2011, so that continues to sort of remain supportive for the euro. However, you would argue, say for example, the political situation I mean, I'm massive hypothetical here, if the political position in the US improved, then perhaps you could start to see a bit of a turnaround and some of that long euro positioning starting to unwind. But for now, certainly the dollar remains under pressure. Now, in terms of markets today, we've got a slightly weaker euro, nothing too significant. Sterling has rebounded, and that sort of dichotomy between euro and sterling is sort of reflected in the PMIs that have been announced this morning. And what we saw was the Eurozone PMIs just drifting off, coming off a bit, being sort of downwardly revised from the flash reading. But the UK PMI beat expectations 55.1 and showed strong order growth and employment. So that has helped sterling to rally a little bit, about 20 ticks actually on the dollar. And the move since that PMI announcement has been about sort of 20-25 ticks. Now, yen is basically flat, as is gold. So nothing too doing in terms of direction on these markets. But equity markets are stronger, and that FTSE 100 is stronger on the back of BP earnings, and earnings coming in better than expected. BP a big weighting in FTSE 100. That is driving the outperformance. But generally speaking, you had the Asian markets that were slightly higher, despite the fact that once again the S&P 500 was slightly lower. Interesting. That's 2 days in a row. Is that rolling over? I'm not quite sure yet. I think probably likely to be just a bit of a consolidation. But we are seeing, as I said, that dollar coming under pressure. So throughout the day we get these the PMIs, and what we have got now is the Eurozone growth data, expected to be plus 0.6% for the quarter. Now, UK was plus 0.3% for Q2 as the first reading. So the run rate of Eurozone growth is double that of the UK at the moment, if that is to be believed. Into the afternoon, we've got some important data for the US. We've got inflation. That is the core PCE, which is the core personal consumption expenditure. That is the Fed's preferred inflation data. 1.4% is the expectation. That would be in line with last month. But we've also got the ISM manufacturing data, and that is expected to just come lower to 56.5 for the US. So those are two important data points this afternoon. Now, my chart of the day is the Canadian dollar. Canadian dollar has been in this downtrend channel for the past, what's that, 6 weeks or so, having accelerated lower. But we've seen the past week or so, basically the market consolidating. That consolidation point coming around 2460. 2460 was that big low from April 2016. Yes, it has breached it, but it certainly seems to be looking to build support. That support is coming as the momentum indicators starting to turn round a touch, are they? MACD lines starting to tick higher, arguably. RSI back to 30, around 30. Is this a basis of support coming in? Since that low, 2412, we haven't seen that breached. Several occasions it's been tested, but not yet breached in the last 4 days. So this is a support building. Is this a support that's going to turn into consolidation that breaks that downtrend channel? It's possible. Recovery on the upside would be seen on a move above 2575, which was that reaction high we saw last week. And that will complete a little double bottom pattern. Now, you can see here on the hourly chart, the market is basically going sideways, just dropped off again. Momentum indicators more neutral. Losing that support 2445 would be disappointing, which is not a million miles away from that now. But that 2412 level is key to the support. So the market is sort of building a basis of support. Is that going to hold? The momentum indicators and the moving averages are a little bit more neutrally configured on the hourly chart. But it'll be interesting to see if this can start to sort of hold that support and then break that downtrend channel. That could be the beginning of an arguably a bit of a turnaround rally, but 25.75 needs to break on the upside. So with that in mind, I wish you good luck in your trading today, and I'll speak to you later. Thank you.